There is a lot of talk right now about the market crashing, about the economy turning, a recession starting, and really the end of the world being right around the corner. And in this video, I just want to give you some of my thoughts from a trading perspective about what does this all mean? Is this a bad time to be on the screens? Is it a bad time to trade? And if you have questions like that, and maybe you've thought some of these things, don't worry. I've got your back. Your boy's been through a few of these over the years. And if for any reason you're new to the channel and not familiar with me, a big welcome to you. Glad you found your way here. I hope you plan on sticking around. My name is Corbs. I'm a full-time futures trader, currently on a bit of a long side quest in life where I'm trading and traveling full-time, just growing my hair and filling my passport. I've been doing this for almost 2 years now on this trip specifically, typically going from one country to the next, usually a month at a time, and currently in the Asia portion of the trip. And of the time that I've been on the screens, if I had to count every time that the economy was in the toilets, that the meltdown was happening, that we've had a good run, but it's all over. If I had to count these down, I would need all my fingers. I would need some of my toes. And in this video, I just want to talk to you about some general observations I have about, when things are melting down, when things are turning, and when it's getting very scary out there. And I want to give you some thoughts about some very real pros to trading during these times that we need to be aware of if you're not. And then I just want to talk about some practical things that I do when we're in this type of an environment, and some of the moves that I make to make adjustments, and some of the things that I put in place that help me during these times as well. Okay, so let's jump into it and talk about some general thoughts here to start things off. It would be very important to understand that there is a big difference between investing and in trading. If you're new to the markets, or potentially you've been interested in trading, it would be easy to look at what's going on and to hear the news media, and to even see some of your longer term investments taking a big hit, and to feel like this has to be a bad time to be involved in the markets. That would make a lot of sense. And as an investor, we don't want to see volatility. Investors want to see the market being very calm, the market slowly moving, preferably up. And you don't want to see big drops. You don't want to see a lot of volatility and a lot of action. As a trader, though, it's the complete opposite. Our earning potential is tied to the volatility. And when the market is slow and not moving very much, our earning potential dries up. And when the market is being volatile and there's a lot of movement, normally because something bad's going on, this is where our earning potential grows. And it's, in fact, a better time to be a trader. And when the market is going crazy, and when it seems like things are going bad, this, in most cases, is the best times to be on a screen. At least they can be the most profitable times to be on a screen. And something to keep in mind as well, when we're talking about bad news, this is always the low-hanging fruit that everybody can talk about. And all of us as people, we're secretly, or not so secretly, little drama llamas that just love to feed on that type of thing. And when there is any type of blood in the water, and when things are starting to potentially turn down, everybody wants to talk about it. I'm here making a video about it right now. Nobody's immune to jumping on that bandwagon. And it's very much been my perspective that nobody knows what's going to happen. Of course, we got the puppet masters up top that are pulling all the levers, but the rest of us, we don't know what's going to happen. And what goes on 3 weeks from now, months from now, we don't know. And it's very easy for people to come on and just talk very specifically about what's going on and be polarizing with it. But it's been my observation that this is not the case. Nobody knows. We'll all cross that bridge when we come to it. And if you're in a situation where maybe you're feeling a little worried about what's going on and outside the markets, and maybe in the environment that you're in right now, I know a lot of people are feeling the pressure. It would just be important to say that there's always a way forward. There's always something that can be done. And it requires us to make sure we're in a good creative space. And I guess what I'm trying to say here is, during this time, just guard your heart and don't sit there and feed on a lot of negative information that might not even be accurate. Yeah. With algorithms and the way things work right now, it's very, very easy to do that. So be careful out there. Okay. Let me talk to you about some real pros around trading during a recession, during a time where the market is crashing. One of the things to keep in mind is that when the market is dropping specifically, a lot of times it is better to be involved in a short to make money as the market is going down than it is to be in a long. Simply for the fact that statistically, when the market goes down, it typically goes farther and goes faster than when it is going up. And so when we are in a short position, when the market, has these scary moves that a lot of people freak out about, as traders, these can provide us with outsized opportunities and be in a position where we get paid faster in almost all cases. Another thing to keep in mind is that when the market is going crazy, you are going to have more trading opportunities. Regardless of how you approach the market, regardless of what your method is, when the market is being extra volatile, there will be more opportunities that surface. By the nature of how markets move and what our job is as traders, when we sit down at the screens, we have to let the market give us more information so that we can put together more trade ideas. We have to wait for those trade ideas to get set up with the price action to a place that we have a defined risk to reward in. Once we're in those trades, we have to let those develop and work, or take those off as they fail. All of these things take time, and there's only so many hours in the day. And by very nature, when the market is moving slow, only so many of those things can happen in one session. But when the market is being wild and when the market is moving a lot, you are going to have more things surface. There's more things that are going to develop. There's going to be more, to do. Another obvious pro would be we don't have to stay in our trades as long. The longer that we're in the market, the more we're opening ourselves up, and typically the more frustrating it is, or at least stressful. And when the market's moving fast, we obviously get to be in this position where we can take trades off very quickly when they're not working. They will go to profit much more quickly in this type of an environment. And we just don't have to stay in our trades as long, which is a very beautiful thing. Another thing to keep in mind as well, when the action is very volatile, a lot of times it can be more clean and you can see things a lot more clearly. When the market is slow and kind of shaping up, a lot of times it can be hard to connect all the dots of what's going on. But when it's happening very fast, as long as you don't get sucked up into the noise and you can have perspective, it typically is a much cleaner on the swings that are happening, where it is going, how it's getting there. The same way that if you were to watch kind of a slow, let's say normal day, if you can remember one of those, if you were to watch that shape up in real time and then go back and watch that same day on a market replay at 30 times the speed, you're going to see things when it's fast that you just can't see, or you're not able to put together when it's going really slow. And although a lot of confusion happens when the market is being volatile, I'm going to say a word about that in a second. If you're approaching this right, it can actually be a lot more clean on what is happening, and the moves that are going on can be a lot better for us to take advantage of. These are some very real pros. And I could go on and on here with the pros that happen when the market is being scary, when the market is down, and when times are very uncertain, to emphasize the point that these are really great times to be trading. Now, let's talk specifically about some of the things that I keep in mind and some of the things that I do. This is not gospel that everybody should stick to these things, but these are things that I think about and that I incorporate. And this can be very helpful if potentially for you to do as well, or at least this might get the old think tank going in a certain direction, and maybe you can make some of your own observations. Observations that we make on our own, they're like these beautiful gems that usually cost us a lot of money and a lot of time to figure out. And these gems, they should be talked about. They should be shared. And I hope some of these things are helpful to you, because they're very helpful to me. Okay. Something to keep in mind is that the volatility just exaggerates everything. And one of the things that this can do is make you feel like you're very confused about what's going on. The market is just moving, it's ripping all over the place. And the reality of the situation is, when we trade, most of the time we are confused. We don't know what to do. Most of the action that we see, if we sit on the screens for the entire session, almost every single price that is being traded, it is not for us. There's no edge there. It's not a place for us to get involved. If we are in a trade, there's plenty of time where we have to just sit and let that trade work and not micromanage it. And the majority of time that we are on the screens, we are waiting for more information. We are waiting for clarity, because most of the action is just random to us. It is very chaotic. And when the market is very volatile, that just gets exaggerated. And so you feel like everything's happening and you don't know what to do. But the secret is, most of the time, none of us know what to do. We're just waiting for that moment of clarity. We're waiting for something to surface that gives us an edge. And it's easy to get sucked into feeling like you don't know what's going on. And it's just because, in a lot of cases, it's just being exaggerated. The market is still, most of the time, not giving us an edge, most of the time, nothing to do. And inside of all that volatility, there still is plenty of clarity. We just have to be prepared to be not even more patient, but it just feels like we have to be more patient because of the speed at which everything is going on. I hope that makes sense and I hope that tracks, because this is an important thing to understand. And it is wildly important that we don't get caught up in just chasing around price. It's so easy to do in this environment. And there's no edge in that. The feelings like it might go up, it might stop here, it looks like it's turning. These are not trade ideas, and this is not a way to trade with any type of consistency. Yeah, so we have to be very careful in these environments as well. Not to do anything like that. Okay, something that I keep in mind and something that's very important to me is when the market is being very volatile like this, do not let trades work against me. Okay, even to the extent of erring on the side of getting chopped out. And what's very normal is in an environment like this where it's moving very heavily, you can find yourself in a position if you're trading something like the ES where you enter a trade, maybe it moves against you 3 or 4 points, and then instead of rotating back in your favor, it just jets off 9 points against you, and you're down 13, 14 points on a trade very quickly. and these things can happen multiple times throughout the day if we're not careful. And so when the market is being very volatile like this, it's really important to me, and this is some of the adjustments that I make, is just be quick on the trigger and do not let trades work against me. And this isn't always the case. There's a lot of environments where the market is stuck in some type of a range where I don't want to be super specific with what's going on. I want to give that a little bit more room because I don't want to be needlessly chopped out. But the risk profile there is very different. In an environment like this, the risk is just so high to be into the market, and to the likelihood that something jets against you with an outsized move is just very high. And so even at the cost of taking a chop out, I would rather take unnecessary chop outs throughout the session than have trades rip against me, which are very, are very, very common. So again, not letting trades work against me is very important to me when we're in this type of an environment. Okay, something that should be obvious, but I think it should be said, is when the market is volatile, we have to either increase our risk or we have to reduce our size. One of those things have to happen. We can use the same amount of risk, but we have to drop down the size so that we can have the freedom to participate in this environment. Or we can use the same amount of size, but we need to make adjustments to how much risk we're taking. And as traders, we can't have these concrete things we just stick to no matter what. The market is dynamic. And if you're trying to just do a set plan when the market is this volatile, you're not going to be able to participate. It won't work. Yeah, you won't be able to stay in the game without hitting your risk parameters or breaking them. Okay, so make those as adjustments, of course. Something that's very important to me as well is not to let winners turn into losers. Okay. You might be thinking, well, really, Corbs, did you need a volatile market environment to tell you that little gold nugget? And of course, this is probably good practice all around. But hear me out, because specifically in this environment, it's very normal for me to be in positions where I might be up 6, 7 points, and then very quickly that rotates back around, goes through my entry, and then I'm down 4, 5, 6 points. Yeah, making these swings that happen in the P&L. And sometimes the trades fail, and this happens. And then sometimes the market's just being very volatile. And it's very normal for the way that I'm trading that I'm not able to sit through those types of things. And so if I'm not careful, this will happen multiple times throughout the day where a trade is starting to work out, it rips against me, and I have to take it off. And so for that reason, I'm very cautious not to let winners turn into losers. And typically the way that I'll handle this is if a trade is working out and I'm, maybe it's up 6, 7, 8, 9 points in my favor, I'll put even a hard stop in for profit at maybe 3 or 4 points in profit. And the purpose of this is just because when it starts to roll back, I know me, and I know that I'm not going to want to take this off for a small win. And I know that I'm not going to want to take it off at my original entry. And I will take it off when it gets back to where I have to. But I don't want to be on the wrong side of that dynamic. I would much rather let that thing come back, take a small profit, and then look to potentially re-enter than to have to let that go into a loss to take it off and then potentially look to re-enter. Again, because I understand that this can happen 7 times throughout the course of a session, and not being on the wrong side of that, or just being able to not take those losses, but turn those into small winners, which is not what I'm going for. But in this environment, it's an adjustment that I have to make because it can change the trajectory of the entire day by not letting that happen. And again, these are observations, but this is something that I've recognized that just can happen a lot in this environment for the way that I'm trading. And we have to make some things happen so we don't get on the wrong side of things like this. Yeah. Okay. Something else to keep in mind here is don't lose the value of a dollar. Yeah. Uh, it's probably normal. You might be in a position where you're used to making like $200 to $500 a day while you're trading. And then in this environment, you can be in a position where you're up, in a trade, you're up 20 points, you're up $1,000. And to be in that position of letting that roll back on you, or not securing those profits, or to find yourself up $1,800 on the day. And instead of being very careful with that and protective with that, just getting a little wily with it and find yourself down $2,000 on the day and experiencing these huge swings. Yeah. And in other areas of life, you wouldn't be out there just slinging around $1,500 all over the place. But when the market's volatile and in trading, it's very easy to do. And especially on the come up, and especially if you're still, climbing, we all are, but especially if you're still working on consistency. Some of these times where you are part of some of these outsized moves, these can be very special and very impactful. And you want to make sure that you don't willy-nilly just disrespect those. Okay. Very easy to do when the market's volatile, but just as an observation, don't lose the value of a dollar. Right. I would say very important. Also, adjust for the speed. Okay. Market's very volatile and it requires us to act more decisively. In trading, we have to be decisive anyway, but there's like this extreme version of it when the market's doing the thing it's doing right now, when the market's in some type of a crash, or when things are happening. And so when I come into this, I'm also prepared in this way to where just mentally being ready to just be a little extra focused, a little extra dialed in, and understanding that this environment is going to require me to make more decisive action. If I'm not, you're going to miss things. You're going to get in at weird places. You're going to let things roll back on you. The speed increases, and we have to be able to adjust to that as well. And it takes some, even today, sitting down the screens, like one of the thoughts going through my mind is just being prepared for that, being ready to be very decisive. These things can help. And then I'll say as a last point, don't be afraid to just make sure we're taking breaks from the screen. During this time, it's normal. Most of us are going to be putting in a lot more screen time. And there's this situation that happens that as we trade, it's just kind of a slow build of us getting more and more attached to what is happening, more and more concerned about the P&L, more and more concerned about the outcome of a trade. And we can only focus on one thing at a time. And if you put your focus on the P&L, you cannot also focus on the process. And you're going to start doing crazy things when you're focused on the P&L. We got to be focused on the process. But there's this drift that happens that takes us away the longer we stay on the screens. And this affects all of us. Some of us more than others. You might, sit down at the screens and immediately start freaking out about the results, or it might happen over time. But the point being is that it slowly happens, or for some of you, very fast. And this is why a lot of people start off the day trading very well, and then at some point they just go off the rails and they start, doing a lot of damage. And partially because of this dynamic here. And so one of the things we have to do is just keep it monitoring it where we're not getting sucked in. We're not getting so concerned about P&L, so concerned about our trades, getting lost in the numbers. Just make sure that we're in a good headspace. And one of the best things that we can do is just use the Nike defense, put on your sneakers and just run away. Spend some time off the screens. If you can spend, it can be fast, like 3 to 10 minutes sometimes, but just get off the screens until you don't think about it. Right? Don't get off the screens and still have your mind swimming around with what's going on, but get off the screens and just stay off the screens until you're not thinking about it anymore, until you're properly just have had a little break. And then you can go back with some fresh eyes. And what this does is kind of reset that invisible creep that's happening, that's trying to get you away from focusing on the right things and trying to get you to focus on the P&L. Okay. This can be very impactful to make sure that we're taking some nice breaks from the screen. All right. Listen, when the economy is getting hit hard and a lot of businesses are freaking out and things are looking very gloomy, these can be the absolute best times to be a trader and the best times to be on the screens. Okay. So everybody's chins up. No gloom and doom around here. And I hope that this gives you, if needed, maybe a little bit of encouragement or some thoughts, because we should not, as traders, be into this environment thinking, woe is us, or oh, this is bad. This is actually good. And of course, we don't want too much of a good thing. We don't want the market to go down too far and too many bad things to happen. But all good things in moderation, yeah, creates very good environments for us as traders. And as always, at some level, we're all in this together. So good luck out there. Happy trading. Don't do anything crazy if you're going to be on the screens between now and the next time I see you.